This is an update and technical analysis on Bitcoin cryptocurrency here off the daily interval, and I mentioned it in my previous video as an objective profit-taking target level, coinciding with long traders and or bull traders need to step in right about now in a triple keyline pivotal inflection point of support there. And I'll zoom in here and really to the button is exactly where dollar cost average, long traders, dip buyers, bull traders ended up stepping in right to the button amongst my key 19,611.40 price support that coincides with the weekly interval, the much larger picture to the cryptocurrency markets, and coinciding with the 200-day moving average of support we had down below, especially the primary downtrend line off of the reactionary highs of November 2021, December. Call it the pin to the bubble, a primary downtrend line there. We had a reaction. We ended up reacting right to the button amongst that 19,611.40 price support. Ended up getting bid up, and we actually back tested that primary downtrend line and never looked back. It has been a complete momentum fueled short squeeze to the upside, slicing right through major support and resistance levels, sliced right through that 21,453 price resistance, coinciding with the 50-day moving average, and we've effectively broken out here, back tested this key top of the key primary trading range, and started to get bid up and completely broke out here, burning off 3 out of 4 momentum indicator negative and or bearish divergences off the 240-minute interval. So the divergence has been burned. We only have our side negative divergence as of now, increasing the odds. I've added some key levels up on top here for any really any long traders or dip buyers that came and bought amongst my key 19,611 price support, and thus far already up almost hitting that 236 fibs retracement. You're talking about a 40% right off those reactionary lows, 40% in gains to the upside. And here are some key resistance levels I've added here: that 231 price resistance, called the 236 fibs retracement, and the 28,891.70 price resistance up above, with the 31,914 price resistance, and target 3 right there at the 34,489 price target right there. So for any swing traders and or momentum traders, that was a key inflection point to buy at, and it has been heavily bid since that time. We are starting to spawn in some new renewed life into some of the momentum indicators down below, with the oscillator testing the zero line resistance, starting to hone it off above where we already have a moving average convergence crossover up above, with the histogram bars aiming towards the upside. So key inflection point to watch. We still have some more, and you know, we could get rejected here slightly, and maybe even gun back down to the trading range, zigzag towards that trading range there, and then that key level needs to be defended at all costs. Call it the 24,623.50 price support. That's exactly what bull traders want to see. They want to see a renewed rally and or renewed uptrend towards some of these key inflection points. Bull traders, short sellers, bear traders, they want to see a potential rejection amongst that 236 fibs retracement, you know, which would actually apply for an aggressive, renewed short trade setup, and even start to scale in. This is more so an aggressive short trade setup stance, where you'll begin to scale in and try to hone in thirds of your position, to hone in on some of these key resistance levels up above, calling the near-term top there. So that's exactly what they want to see. Maybe even a reapplied rejection amongst this key level for any short seller swing traders. That would be ideal levels to scale in dollar cost averaging your short trade position. And ultimately, short sellers and or bear traders want to see a complete renewed momentum fueled overshoot right back into the trading range here for a much larger, bigger move to the downside. If we get that, they want to see, and there is nothing more bearish in trading than a false breakout. This is a breakout. However you want to, you got to add a check mark to the bull traders and or long traders. This is a breakout amongst a key primary trading range where we have been consolidating up here for months on end, for almost a full year of consolidation. We're 3 months away from my full consolidation period here amongst this key primary trading range. So, you know, bull traders want to see a momentum fueled false breakout right back in this key trading range, and bull traders and or long traders want to see a renewed rally to the upside, and even maybe even a potential back test. I could see that, maybe a potential longer term trend line, where we do end up bouncing right back to that key, retesting the 21,453.80 price support there, and maintain that uptrend to the upside. I want to really set some focus now on the 240-minute interval. We'll really zoom in now and see what's going on on underneath the technical hood of some of the near-term intervals. And really what's so significant here is we have put in near-term potential divergences here. We do have near-term negative and or bearish divergence on 2 of the 3 momentum indicators here, unconfirmed in the oscillator. But again, even a potential crossover could end up winding this trade in the other direction. Now, we do have some of the larger divergences still intact on the RSI. So we do have negative and bearish divergences that have continued to establish here in the RSI, hanging on by a single thread, so to speak. Bull traders and or dip buyers, again, they want to maybe you don't want to see maybe a breakdown below that 26,740. They want to keep this rally intact and burn out that 236 fibs retracement at that 28,231 and the 28,891, both correlated with the daily intervals here. Once you start to burn out these key inflection resistance levels, then that's when I believe a lot of these momentum indicators, negative bearish divergences, even on the near-term interval, begin to get burned out here. And you'll have sort of a slip slide amongst the moving average convergence crossover, turning it into a renewed rally to the upside. Burn off those divergences is right when you take out these key resistance levels, 28,891, and I would only expect more fuel in a short squeezed rally to the upside. Really keen in on that second and third target up above. Short sellers and or bear traders, they want to see a breakdown. They want to see maybe this 26,600 level go with those reactionary highs, put in confirmed oscillator divergence. So you'll have all three momentum indicators with negative and or bearish divergence, and they want to say renewed, maybe even a slight marginal new high right up amongst that 28,231. For any swing trader, short sellers, they want to see that rejected, and or the 28,891 rejected there, and the next move down, starting to challenge that 24,875 price support there. A lot of these key reactions where you could just tell here we're really to the button here. A lot of these older levels, a lot of this was a short squeeze. You could tell we had some sort of reaction amongst that key resistance level as well. Blew right past it, had another multiple reactionary highs and lows amongst that key level there where we consolidated. So these key levels are still pretty much intact in my favor. I still really like a lot of these key levels, big support and resistance levels down below for any additional moves to the downside for targets on any short positions or long side entries to the upside. So we'll see what happens. I'll keep you updated if we see any more significance here in the charts.